Okay, so we're going over liquidity sweeps and we're going to be going over SMT liquidity sweeps. We'll be talking about liquidity sweeps by sweeping the wick and liquidity sweeps by sweeping the bodies. Now, when it comes to body liquidity sweeps, I'll be looking at Forex compared to indices because what ICT says is that on Forex, the banks or the big institutions, they use the bodies instead of the wicks as their liquidity. And we know that institutions are not very present in indexes. So when I go over body like liquidity sweeps, we'll more be looking at Forex. So I'll go over that kind of at the end. But we'll also be going over SMT with wicks and SMT with bodies. And then I'll tell you guys kind of what makes it stronger SMT wicks, bodies, whatever, and whatever. So, as we all know, that there is going to be liquidity lying below old lows and above old highs, and we're basically looking for price to trade to them and trade below them as well. So now, how much of a liquidity sweep would I classify as a liquidity sweep? I'm looking for at least 3 ticks at the minimum. So for it to be considered a liquidity sweep for me, as if we were to sweep price by like one handle or 25 cents on a futures chart, I'm not going to be considering that a sweep of liquidity yet. So, it doesn't happen a lot, but sometimes it happens. You're looking for at least um 3 handles of sweep, right? This is or 3 ticks of sweep, so 75 cents. This is only two. We can see price comes back up in there one more time. We can see here, right? We do get out 3 ticks right there, and that's a sweep. Same thing here, you get more than 3 ticks, and that's a sweep. Anything below that, I'm not considering a sweep. Why is because people there's gonna be spread, and your spread usually it's anywhere between 0 to 0.75, no, 0.25, 0.25 to 0.75. So we need at least 0.25 to 0.75 ticks above a high for me to consider it to be a really good liquidity sweep and not to have to like bypass it and be like, okay, now I don't have to look at it as relative equals, right? So we'll take a look somewhere here as well, right? Underneath, once price trades below here, right? We're looking for 3 ticks here, and you see we get that 3 ticks perfectly right there, and then we shoot up from there. So that's the gist of liquidity sweeps. We're looking basically for candles and their wicks to trade below lows like this. For gold, I would also be looking for body liquidity sweeps, and we'll go over that in just a second. So do we have any questions about kind of liquidity sweeps, or did Jamie or RLE want me to go into anything specific about liquidity sweeps at all? Like I can go into 25% extensions, which kind of follows a similar rule when it comes to stuff like this, when it comes to liquidity sweeps. This 25% sweep level is basically saying how far can price sweep up. Um Basically it's kind of similar to this 3 tick or 3 tick thing that I said 75 cents, but this is looking at a 25% extension of this given range. So do we have any questions about liquidity sweeps or anything like that? If not, then we'll move on to SMT real quick. Long story short, again, you're just looking for price to trade above an old high or below an old low, right? And you want to look for at least 3 ticks on NQ. You could probably look for one, 1 or 2 ticks is okay. Yes. So let's go over to SMT then. I'm gonna open up 2 charts here. I'm gonna have the um, ES chart open here, and then I'm gonna have the NQ chart open here. And I know there was some pretty strong hourly SMT, I believe, here. And actually, before I go over all this stuff, let's go over what SMT is using drawings. So let's we want to find correlated assets or correlated assets, and then some assets are inversely correlated and some assets are positively correlated. So let's go over kind of what I mean by inversely correlated and then positively correlated real quick. And we'll go over what a market is called when they're not following each other and what makes it low probability. So what we're looking for is SMT is also called smart money technique. And what this basically is that you're going to have a whole bunch of indexes or a whole bunch of different pairs, right? With kind of the center being DXY. And then you're kind of going to have a um, the DXY kind of splits into two things here, right? And of course, we can go more deep into it into bonds and stuff like that, but I'm not going to go into that. But we have DXY here, and then we have our Forex pairs, specifically USD, and then we'll have our indices. Am I like retarded here? Okay, indices. Right, and from here we have our Forex pairs and we have our indices for, we also have gold, I guess, so, or I guess Forex pairs plus gold, whatever, plus metals. Right, we have Forex pairs plus metals and we have indices here. Now, what we want to see is, and each one is going to kind of have a different strength in terms of correlation here. So indices is going to have like a decent strength, but it's not going to be very insane compared to some of the Forex pairs. So the Forex pairs we'll be talking about, I guess, we'll go into the USD pairs, and then we'll have metal here, right? Well, for USD pairs, which would be like GBP, USD, Euro, USD, or USD, JPY. And now what you're looking for here, right, is when you see the USD in front of the other currency, that means they are positively correlated. And if you see it in the back of it, that means they're negatively correlated, which means that every time DXY goes up, these assets should go down. And every time DXY goes down, these assets should go up. And when it has USD in front of it, the DXY and the J or whatever pair you're using should follow. So again, right? USD in front, USD in front equals positive / follow. So it should follow the DXY. And again, USD in the back, XUSD in back equals inversely. Should go opposites. That means the pairs with, again, USD in front of it should follow the DXY, and USD pairs in the back should not. Right? Same thing with metals here. Metals are always inversely correlated, so they're going to be in the back, and so are the indices. But the indices correlation is not going to be as strong as these guys here. So let's go over what SMT looks like and how we can spot them in the market, as well as what body SMT is, which is both here on indices and on Forex and everything else. So basically what SMT is, for just the sake of things, we'll take 3 pairs, and this is going to be like your ideal situation, but we'll get rid of the DX. We won't have to pay attention too much for the DXY. I'll be more paying attention to ES and NQ here, and something like this. So since these are inversely correlated, what are we looking for? DXY to make higher high, something like this here, right? And then something like this, right? And in the same time, we should see ES do something like, okay, I'm not even drawing, bro. Okay, we should see ES do something like this, right? And then we'll see NQ do something like this. Right, so we want to see inverse correlation here, right? And when we see that this is the same low here as here, so I'm going to mark these out as 1. I'm going to make this a little smaller, right? Let me know if you guys need me to make anything bigger here. 1, 2, 3. Okay. What about at 1, 2, and 3? Same thing here. 1, 2, 3. And we'll have this here. 1, 2, 3. And basically what we're looking for is, we want all the assets to be correlated together, right? We want all of them to move together. And when we see something like this happen, where we see the DXY, right, decides to take this high, since they're inversely correlated, that's this one low here, right? We see ES does not take this, and we see NQ take this, right? This means that we have SMT here with ES, or smart money technique with ES and the NASDAQ and the dollar index, right? And what this means is that it's a potential to do a reversal or a retracement back to continue another move. That's the point of SMT here. And basically we're looking for 1 or 2 assets. Let's focus just on ES and NQ now. One of them to take the low and one of them to not. And the same is vice versa when we're looking for SMT, I guess, at the highs here, right? Maybe ES wants to do something like this and NQ doesn't here, right? Now we have ES showing strength here, and I guess it's a really good example here. We have this here showing that ES and NQ, right? ES is a stronger pair going up, and NQ is a stronger pair going short. What does that mean now? That means when NQ decides to go, that means if you want to short an NQ is going to go down a lot more than ES is going to go down, right? ES is going to go down less than NQ, but then on the controversy, right? ES is going to go up a lot more than NQ is going to go up. Does that make sense? Since ES is showing us that it's a stronger pair here, because it's making this higher high, right? It's going to be weaker going down, and that means it's going to be stronger going up, and the same thing vice versa for NQ. Now let's talk about SMT lows real quick and how they're protected. Every time you see an SMT low here, or an SMT high, that means genuinely this high is going to be protected. That means if this is true SMT and we are trying to get to an actual draw on liquidity, which is down here, price should not trade above this SMT high. All right. Any questions on what SMT looks like real quick? We'll kind of go over it in the live chart examples right now. Cool. Sorry, hopefully I didn't go on too big of a spree here, but we'll look at this NQ chart real quick here. And let me see, I could also do this. Okay. Does this look good? I mean, yeah, it's not great to see. Okay. Just not gonna do it. Okay. So we're here on the hourly chart on both NQ and ES here, and we can see that. Let's look at this low, right? This low will be our 0.1, right? We have our 0.2 here, we have a 0.3 here, right? Similarly, 0.1, 0.2, and 0.3. Okay, 0.3. Yeah. And 0.3. Okay. And what do we see here between 0.1 and 0.3 here on NQ and ES? We can see that NQ did not take 0.1. That means we have SMT here with ES on 0.1 here. And the same thing here, we have SMT on ES here at 0.1 and 0.3. Right? And now I want you guys to look on how much further we swept the high here on ES compared to how much further we swept the high here on NQ. We can see that's a really big difference. And that's because NQ showed a strength by not wanting to take this low on NQ, right? And again, with it being a solid reversal spot, right, or a solid spot to continue going upwards. Why is that? And that can be considered a solid spot. Well, we have a daily BISI here, right? So since we have a daily BISI, we have that SMT inside the daily BISI. We want to look for SMT inside the daily BISI. Or inside a PD array, and that's what's gonna make our PD array a lot stronger, and what's gonna make us trust that PD array. Now we also have to look at a couple things on how can we trust SMT here, and that is we have to have a swing low point here, and and the candle that takes it also kind of has to be a swing low point. So once we have this, we can kind of confirm that this SMT is here. We can guarantee confirm that the SMT is here once we have this candle closure here, this 9 a.m. candle closure here, but that's not exactly needed if we're given if we have like strong conviction here. We can front run this, right? Because it is going to be SMT here on the 5-minute. However, since this is a 4-hour swing low here, ideally you would look for a 4-hour swing low close. Now that we've confirmed this, we can confirm that this is true SMT. However, this can be front runned in the hourly chart here, as well as lower, as long as we can build that conviction that we're going to go higher. Now, let's also look at something which I'm going to call body SMT, and we'll go over that real quick too, and we'll kind of go over what's stronger, right? Body SMT, we can see here again. So what I'm going to do is I'm going to do this. Okay. Looking at the chart like this, what do we see? The same thing happened here, right? What do we see with the bodies here? We have that SMT there, right? Same thing here. We have that SMT there. So this is body SMT. We're looking for And this is what makes SMT the strongest, right? Because sometimes you'll have SMT where you just see the wicks, right? Where you will just be the wicks and the bodies will close above. Let me see if I can find a good example of something like that. Maybe on like a 1 minute chart or something. I could find an example of that. Let me see. I know there's SMT. There's SMT always somewhere. So let me see if I can find a good example here. Let's see. Friday. We'll kind of look. See, that's not like a really great example. Give me a sec. Let me see if I can find a good one here. Nope. Not really. Hold on. Trying to find a good example for you guys here. Give me a second here. Do you guys take this? Bruh, ain't no way. It's high here. I mean, come on, bruh. Give me like a wick SMT so I can be done with this.
You're good, Exotic. Take your time.
This is so bad, bruh.
It's all good.
What is this? Give me an example. You know what? Fuck the wick SMT. I'll draw it out. Okay, basically, what a wick SMT would look like is we're kind of looking at something like this here. We'll have our candle here. Okay, we'll have our candle like this here. Beef this up a little bit. Right? This will be, let's say this is our candle here. Why is it so big? Let's say this is our candle here. We just have a candle. Don't worry about the color. Right? And it looks something like this. Something like this. Right? And then we'll say okay. And we'll take this high like that with the wick and we'll close it like this. Let's say this is NQ. Equal lows. Yeah, we can assume SMT. I wouldn't hold much power to it. I wouldn't hold as much power on equal lows as it actually taking the lows as SMT, but it's definitely can be considered as it's definitely SMT. Yeah. Okay. Now we also have SMT that looks like this, right? Where price comes up here, right? And we don't really see that SMT with the body and with the wick, right? We don't have the body close above, which is going to confirm a body SMT here, right? We have it closed below. This is a wick SMT, right? And there's nothing wrong with this SMT. This is still considered SMT and can still be considered high probability and on grounds for a reversal. But when we're looking for a like really good reversal point or an SMT we can really trust, we want to look for the body SMT um with the wick SMT. So it looks like this. We have the body closure above this body here, right? And um we have something like this. Yeah, basically something like this. But we can also look at, I'm not going to go and look for an example. I have a couple pictures of an example, but we can also look at what is going to be just strictly body SMT. And this will kind of go more towards on Forex when it comes to body liquidity sweeps. But we can also look for that body SMT. If you give me a second, I'll find it. Um, I have this picture here, right? What is body SMT here? Right here is going to be ES. This is going to be ES here. And this is NQ right here. Okay. And what we see is that here, right? So if the wicks form the SMT but no body, I wouldn't say it's less of a confluence, But I would, uh, I mean, no, I mean, I wouldn't consider it less of a confluence, but I would consider it more like, no, no, yeah, I would consider it a bit less of a confluence, actually. I would. On grounds for like a complete reversal, I would consider it a little bit less of a confluence, but not that big of a difference, right? When it comes to a reversal. Does that make sense, Jamie? Like a little bit, but not really. Okay, cool. So this is what body SMT looks like here. We can clearly see that NQ did not take this high, so we don't have SMT with this high here, right? But we have SMT with the bodies here. Why? Right? ES closed its body above this high here, while NQ didn't even trade above it there, right? That's a form of body SMT right there. All right. Just wanted to show you guys that. And then we'll kind of go over to now real quick the example I wanted to show you guys on what we want to look for when it comes to these kinds of SMTs here, right? So we have this low here and this high here, right? Now this is going to be our probably our basically our strongest form of SMT, right? Where basically we have the body not traded to and the wick not traded to. Now this is body and wick SMT, right? Because NQ doesn't come down to this body here. But what do we see here on ES in this very same low, right? We see ES not only trade with the wick below this low, right? We also see ES close with the bodies below this low. All right, do we see that? And we can see that is grounds for this was enough for our run up above these relative equal highs that we made, right? And again, we can take off our wicks here, right? And we can see we have that SMT here with the bodies, right? Body to body, wick to wick. And this is going to be our strongest form of SMT. And this is going to be this is going to be good grounds for a complete reversal as long as we're anticipating higher prices. Now, if we're anticipating higher prices and we get SMT that's bearish, right? We have to look at things and we have to be able to, can we build the conviction that is this where we want to go down? If not, we can completely ignore the SMT and we can use it as kind of like either it's going to get traded through and canceled out, or we can use it as a small point of to be like, okay, we might reverse down. We have this SMT. We might come down into a premium or into a discount or OTE of the range before coming up. All right. Any questions about that? And again, right, we can see ES and what the heck? Again, we can see ES and NQ, right? What happened? NQ showed weakness and going down again, which is the same thing that followed when we saw that hourly SMT down here. Remember that weakness and going up, and we can see that transferred here. What did we do? We ripped above all-time highs here, right? What did we do after we ripped above all-time highs? Not only did we make this body SMT here, right? We had this wick SMT here with ES and Q. What happened afterwards? We had a complete dump down. All right, does that make sense? And again, we have something similar happen again, right? We have this SMT here, the bodies not traded to here on NQ and ES. Again, our strongest form of SMT here, right? And we're looking at that like that. Boom, SMT. What happens? Price runs up here. Same thing here, right? We have that SMT here with the bodies and the wicks. Boom, that's our strongest form of SMT. All right, body closures and body not even traded to. When it comes to looking at this, you don't even want to see the body traded to when it comes to looking for this, right? Like, so let's say we had a wick that was something like this, right? But didn't take the low, just came in into like the rejection block, if you want to call it that, right? The rejection block here. I would not consider this I would consider this a little bit less probability, even if the body didn't close there, right? Your strongest form is if price never even returned back down to the low of this candle here, right? Ideally, what you want to see happen is for it to return to the change in the state of delivery, which is right here, and that's kind of going to be your best option here. But you know, it's not a perfect world. Okay, and does that all make sense here? And we have no SMT here, right? But what actually do we have here? Actually, this is a perfect example here, right? We have, let's get rid of the wicks here. Okay. What do we see? What do we see here? All right. Equal highs on the bodies, right? What do we see here? Body closure above, right? This is body SMT here. Again, equal highs. I mean, not really the greatest, but since it's bodies, I'm okay to count it. If it was wicks, I generally wouldn't really put much emphasis on equals when it comes to SMT. I'd be looking for them to take it, but it's still SMT. When it comes to the bodies, equals is fine in my opinion, as long as we don't trade above here with the bodies, right? And we can see this is body SMT. You can treat the bodies just like you would treat the wicks when it comes to looking for SMTs. Right? What happens after we make this body SMT after sweeping liquidity on both sides? Right? We fall. Okay. Any questions about SMT, or do we want to go over a couple more examples? If not, I can very quickly go over liquidity sweeps on forex pairs when it comes to body liquidity sweeps, as long as I can find a good example. God damn it, bro. Fuck the yen. Fuck the yen, bro. Yen is so annoying. All right, let me see here. Okay, this is a perfect example right here. This is a liquidity sweep. Simple. This is a liquidity sweep. What do the banks use? Right? The banks use the bodies, right? We clearly have a close above this high, right? Price clearly traded with the bodies above this high here. This is a liquidity sweep on Forex, right? That means once we see this happen, we do not, and we see this swing high be made here, right? Let's go on market structure here, right? Short-term high. Now we have this intermediate term high here. Second we trade with the bodies up here, right? The bodies came up here. We got that close, right? Confirming that this is liquidity sweep. We turned this into a swing high here. Look at this dump down right after we came up into this high here, right? Boom, and we fell, right? Short-term high. We've now made an intermediate term high here, and that means that this never needed to be swept because the institutions were able to use this because, again, the institutionals or the banks use the bodies here on Forex pairs as a liquidity sweep here. So we never had to come and take this high for a liquidity sweep, right? Does that all make sense when it comes to this? Cool. All right, cool. Real quick, we'll go over to the dollar and I'll show you guys what kind of SMT with the dollar and whatever it looks like. So, um, this is the US yen, USD JPY here. So that means this should be correlated together here, right? So what do we see and how can we confirm this SMT here? Well, we have 0.1 here, which is here on the dollar, here on the yen, right? And it comes down to this candle is not perfect, but we basically have this SMT here, right? And this is again grounds for reversal. Why can we consider this grounds on reversal, right? Not only we got that body close above, we got that wick above, right? So this is going to be your high probability SMT grounds for reversal as long as it's in a correct place. Where is this taking place here? This is taking place in this unbalanced part of this monthly SIBI here, right? So we have correct grounds for reversal. We have that SMT down there, right? Same thing here on the yen here. We had this monthly right here, or if you wanted to consider this your unbalanced part of your monthly, right? We came up into the monthly. We had that SMT within that monthly there, and we ended up coming down, and we came down into our discount BISI here. Just down here, or even if you wanted to use this low, right? We came down into our discount right here, right? Discount liquidity pool right here, right? Does that all make sense when it comes to this? When it comes to the SMT here, right? Real quick, we can also look at metals is not as good and gold is really looking bad right now, but I can see if we can get a SMT there, and then we'll look at the pound real quick, right? Same thing here with the pound, right? No SMT here, but we can see how they're inversely correlated here and how they move in complete opposite directions as the dollar falls, right? Point one, point two, these took it together here. Maybe we can look at the euro here. No, euro shows no change. Okay, but anyways, right, we can clearly see how they're inversely correlated here. All right, and I guess we can say we do kind of have SMT like this forming. We just have to wait for a swing low. Okay, any questions about any of this? The body SMT, the body liquidity sweep on Forex, any of that? Okay, this is actually a good example here. Gold, right? Again, inversely correlated. Um, Here we have our gold SMT with the dollar here, point 1, 2, 3, 1, 2, 3. All right, and this is our body SMT on gold here, or our SMT here on gold, again, with the bodies too, right? That's a high probability SMT. All right, any questions? If not, we can wrap up this session.